Hey, welcome to another episode of the Startup Voyage podcast. In this episode, we're going to talk about DeFi and how people like companies like Wind.app is making it more accessible to the average consumer. Today, we have Hussain Elius, co-founder of Wind.app, and he's going to be sharing with us his vision and what he's trying to do to create a better proposition in the DeFi world. Welcome to the show, Elias.
Thanks, Arthur. Really good to be here.
Yeah, so maybe you can just give our listeners a quick, let's say, if you go to an event and I said, "What is your elevator pitch?" in three sentences, what would you be telling people?
So, I can do better. I can do it in one sentence, right?
Okay, good.
What we're trying to do is basically build PayPal or TransferWise, but using Web3 rails, right?
Okay.
So that's a short pitch. The reason that we feel like Web3 is a better layer to do something like this is because of really just two things. Number one is the cost, right? Ultimately, moving money across borders is still very expensive and still very slow. Whereas if you use stable coins such as USDC, USDP, and if you're in a cheap layer 2, you can make these transfers happen almost instantly, right? Number one. Number two is there is a set of regulatory arbitrage to be had when you're sort of building a self-custody wallet over just holding other people's money, right?
Right.
So a self-custody wallet means that the money that is with you in your wallet, it just belongs to you. It's secured cryptographically with a private key or a public key. The company like us, Wind, we don't really hold the money, right? We just provide an interface for you to access the money.
Okay.
So this means that really anyone anywhere in the world can open up an account and start receiving money, right? Without any sort of KYC, without any sort of permission.
Okay.
The KYC is ultimately needed when you're doing, crypto to fiat conversions, but at least to receive the money, it is fast and very simple.
Okay. All right. And then, so I think any user that has gone through the process of trying to go on with fiat to buy crypto or vice versa, go off ramp. Why did you guys end up creating this service? I mean, I guess at what point did you identify this opportunity to create the solution with Wind?
So I have to go a little bit back to actually give you that answer. So, I was a freelancer before I started my last company, .com.
Okay.
And as a freelancer out of Bangladesh, I know firsthand how actually difficult it is to actually go through cross-border payments, right? Especially in emerging markets. Because not only do you not have a lot of choice, the choice that you have are either A, very expensive, or B, has a lot of friction in terms of KYC and compliance, right? So, I had my money in PayPal or Payoneer got locked down because of some KYC issues. And for players such as those, it's easier to sort of shut down your account than to solve the problem because the customers in this side of the world are actually like low value customers ultimately, and they're not really bringing a high level of revenue for you. So that was my sort of freelancing experience. Fast forward a couple of years, when I discovered DeFi and crypto. I realized, here's a solution that allows you to simply hold your money with yourself, and no one can lock you out of your account, right?
Okay. Yeah.
That's one. Number two is obviously stable coins came out. You have MPC authentication, so people can now log into your crypto wallet with just their email address and password. They don't need to remember seed phrases, mnemonics. The infrastructure was improving. And finally, I saw that actually sending the money might be much cheaper using stable coins than using local other remittance rails. Now, crypto has been around for a while, right? Bitcoin has been around for a while. And, people say it's really big for payments, but it's really not. Because, the cost of sending Bitcoin it's very expensive.
Right.
There's a solution to be that. There's Lightning Network, but even that is actually expensive. If you go down to the cost basis, it costs like 4 bits to send one BTC to someone else. And stablecoins sort of solve that, right? So you have all of these different pieces that are being built, and they all came out in the last like 4 or 5 years, right? And then there was this one problem that I had. I was like, hey, I can solve this problem with this technology that is now available, right? So that's how I sort of came up with the idea. And then, by this time, I just exited my previous company, and I thought, hey, this is the right time for me to actually, do something much more bigger, much more global in scale.
Yeah. Okay. So with your solution, what's so different? Like, from for many users out there, they could be on exchange and transfer those stuff in and out, swap whatever they need to, use MetaMask or this. And so how's your solution any different? And you're talking about self-custody wallet, and I'm assuming your users understand wallets to begin with. Yeah.
So I think there's like two major differences, right? Number one is really the user interface. We intentionally don't support a lot of different tokens or a lot of different networks, right? Our thesis is that the end user doesn't really care, right? The end user doesn't really care about what chain you're on. The end user doesn't really care about, what are different tokens. Most end users won't also care about trading or NFTs or anything of that nature, right? Whereas remittances or sending money is sort of a global use case, right? There's nothing speculative about it. So our interface looks and feels more like a PayPal or a TransferWise than like a MetaMask or a Coinbase wallet, right? So we go after very different target user groups. It's more of a Web 2.5 sort of interface, right? The actual backend, where everything is stored, is on the public blockchain, and we use USDC or USDT, but the interface is a very Web 2-ish user interface. So that's number one. And number two is we really integrate different on-ramps and off-ramps together, right? So, what we did was we had to actually build our own on-ramps and off-ramps for a lot of corridors, such as USA. We can send or receive money from USD to Philippines, USD to, in India, in Bangladesh, right? All of these different Southeast Asian regions. And that is something that was built in because, it is not enough for me to just send money to you, right? You're just receiving USDC, but most people just want money in their bank account, right? They're non-crypto natives. So our product is really built for this particular segment, like not just Web3 people who, for us, the problem is solved. It's for, your non-crypto friend that, hey, they can actually start receiving the money. It's very easy to cash out. We give you some access to some DeFi yields as well, but they just think of it as a savings account, right? So once you have all of the basic use cases of banks, which is sending money, spending money, earning money, or investing money. These are all different use cases of money, right? Which banks have. You can now have all of this in a self-custody wallet. That was really never possible before.
Right. Yeah, I think when I think of receiving money, so I also do a lot of freelance work, and if someone wants to send me something, I always think, okay, what's gonna be the cheapest? Like I have to actually think about how when I'm gonna use it to go off ramp, and what provider I'm going to use. And actually, these days I've been checking to make sure that the providers still allow like transfers to a bank account, and their fees haven't changed, but they're extraordinary. Like what some of these places charge as a fee to move, like let's say USDT into Hong Kong dollars into my bank account, and it's annoying to be frank to always be worried about that. I guess,
Honestly, like
yeah.
that is the thing that we, at first when we actually built this, we sorry to cut you off,
No, that's
but
right. Yeah.
but we plan to use existing on-ramps and off-ramps, right? The
Okay.
MoonPays, the Transacts of the world. Issue is that they charge anywhere between what 1 to 2% or maybe more, right, for these on-ramps and off-ramps. And that is fine if you're buying, let's say, ETH, you're buying BTC and you're hoping that the price is going to go up, but
Right.
not if you're receiving, let's say, salaries, right? 1% is
Yeah.
too much, right?
Yeah.
Especially each way. You have to factor that in. So if you factor, let's say, the transactions or MoonPays or transacts on both sides, on the on-ramp side and the off-ramp side, because sometimes your employer may also not want not know about crypto or not
Right.
know how to get a USDC. So you
Right.
really need to
Right.
connect like the entire two financial legs on both ends. So we eventually decided that we needed to build our own on-ramps and off-ramps, and that allows us to actually get our costs down way lower than what these people charge, right? So for example,
Right.
let's say you want to send USD to HKD, let's say on TransferWise. I'm not sure if TransferWise is in Hong Kong, but
Yes. Yes.
yeah.
Yeah. I've heard it.
So for them, the cost is going to be around 1%, all baked in, which is USD to TransferWise, and then USD out to Hong Kong dollars out to your bank account. That's the entire leg. So that
Mm.
comes under around 1% charge. Whereas we can do it at half that price,
Mm.
right? Because we build our own on-ramps and off-ramps on both sides, and in the middle we are using the stable coins for the actual transfer of money.
Right. Right. So essentially, I think your solution is like you said, is a different customer segment, and also mainly for the ones that maybe have issues with, like you said, global transfers or transferring through a Western Union or TransferWise, right? And which is quite costly as well. I guess to a lot of your customers who maybe don't have bank accounts, I guess it's a solution for them as well.
Yeah, absolutely. We're still pretty early in our journey,
Mm,
and I've said like our next target customer profile is those freelancers and remote workers,
right.
but the technology sort of works, and these people ultimately would not require um you know there is this underbanked population that we can also target with the same
Mm,
product. So
okay.
we are also like constantly working to simplify these user interface, right?
Right.
And it was quite a surprise to me when I found that some of our users, even though we don't target that particular segment, they started using us. Just found us online and just started using us automatically. I was like, oh, okay, that's great.
Yeah, it is good.
Yeah,
Okay. Yeah, I sometimes will hire freelancers through a place like Upwork. And Upwork obviously has a different pricing model because it's a platform that connects buyers and sellers. But yeah, recently I just saw something where I mean, when I'm paying for someone's work, they're already taking more than 1%. And to initiate a contract, I think it's at $5 now. Just initiate,
yeah,
even though the contract is $30 worth, right? They'll charge you
yeah.
$5 to initiate the contract, and
Yeah.
then on the other side of it, I believe the freelancers get a lot less. So I think I wonder if in many cases freelancers can use your platform to basically not get screwed, I guess, from these
Y- You know,
platforms.
so the thing is that those charges that you mentioned that cost for Fiverr, but
Yeah.
after that, Fiverr is when they actually send you money, they'll use someone like a pioneer, and they'll have
Yes.
a partnership with a pioneer to send you money,
Yes.
right? And our belief is that the stable coins are of course like much cheaper to send
Mhm.
than pioneer is, right?
Right.
And not just that. So for when we sort of build it, like again, like our product philosophy has changed a lot as we went through our journey. we initially had the idea that, hey, we're going to onboard a client like Fiverr, right? We're going to help them go from USD to USDC, and then we build a platform to backsend USDC to all of their, freelancers.
Right.
But that is very hard to convince a platform of, right? Especially for Fiverr or Upwork. They've been there for many years. Why would they want to work with us or them?
Right.
Because in their view, they already have a solution,
Right.
right? So for them, we actually had to build out a ACH caching mechanism. So let's say, because Fiverr uses ACH or Upwork uses ACH, industry uses ACH, right? So what we do is we give our users a sort of a virtual bank account address, right? And anytime you receive USD into that virtual bank account, it automatically gets converted into USDC and it sits in your wallet, right?
Okay.
So let's say, so in that scenario, you can just get that number from our app. You can plug that into Fiverr, and Fiverr just sends you the money, right? So there's no process change for them, but you are receiving at least as stable coins, regardless of where you are in the world.
Right.
And we are currently in some markets like Philippines, Bangladesh, India,
Mhm.
Singapore, and others. There are plenty of markets that we're not in yet, right? We have not built those offer capabilities yet.
Mhm.
But let's say, you are a freelancer in Nigeria, right? Or somewhere else. You can take that USDC out, right, from our app into your Binance exchange or any other one, and then you can still off-ramp it, right? So,
Right.
so this entire mechanism, is great because we don't hold users' custody in any
Right.
place.
Okay. So tell me a little bit more. So when someone gets USDC deposited, does it automatically earn, or do they need to indicate how a dollar amount that they wanted to basically?
It's the latter. It's the latter.
Okay.
Right. Yeah. I mean, I was there on the USD and Terra Luna collapse, so I don't want to abstract away the risk to the users, right?
Yeah.
So I'm very clear that, hey, you're holding USDC, not USD, right?
Yeah.
And hey, if you want to earn, you have to deposit into this, smart contract, Aave,
Right.
or something else, and
A,
here are
a
the
fin. Yeah.
risks, right? You have to make them very clear with all of
Right.
this.
Right. Okay. Yeah. I saw that you've got the Aave, Earn, and Aveen. I forget a
Fine.
couple. Fine.
Fine.
Yeah.
Yeah.
Fine. Yeah.
So, yeah, we vet the players that we use.
Okay. So tell me a little bit more about the journey it's been to get users. Has it been easy? Is it this solves a big problem, especially with freelancers. What's been some of the feedback from the customers?
Feedback's been pretty good, actually, generally good. I found that, we wanted to obviously solve a very specific problem. But what we saw is that, ultimately the infrastructure that we thought was there wasn't like all the way there. The software layer is already there, right?
Right.
But the actual movement of money from stable coins to fiat, right? That is not always there in every market. Philippines is a good market for us because it's very crypto friendly. They have some very good exchanges over there. But then there are other markets in which you don't have uh, accessible order off ramps, right? Just a country like Bangladesh, for example, you don't have any crypto exchange over here at all, right? Because crypto is like fully illegal. So what do you do, right? Or markets like India, which has this crypto tax, this crypto wealth tax, it scares a lot of people from receiving, crypto as a payment mechanism. So, what we then did was, like as I said, we built our own infrastructure to actually send stables out. To do this, We had to do some more legwork. We had to get licensed ourselves. We have a license right now in Europe, another one is in UAE, through which we manage the liquidity and we do the disbursements, collections and disbursements, right? And what that ultimately means is, finally, like we got control of the cost of sending the money, right? And this product we built out for ourselves. What we saw is that there are other remittance companies or other actually on-off ramping companies, which were excited for this particular infrastructure. And we found out that there's a lot of people actually did this. So we wrapped that up as an API, and then we started selling those APIs as well. And that did really well. So right now, most of our volume, or I think 50% of our volume, is really coming from these developers or these platform customers, what we call them, who onboard their own end customers, and we just sell to the business. So that was exciting. So we're not only like a consumer part of play, we're also having this infrastructure here as well.
Okay, so then I guess what do you think then is your competitive edge? I mean, I can imagine someone, other players in this space, trying to build something similar.
I think the license is the big one, right?
Okay.
These licenses takes many months, sometimes more than a year to acquire. They're also very expensive.
Yep.
They need some expensive hires as well. You need to hire a chief compliance officer, you need to hire MLROs, you have to have transaction monitoring, AML compliance.
Sure.
It sounds very boring, but if you are doing fintech, you have to sort of do all of this, right? So it's not as easy as it is to make a permissionless stack to build a on-off ramp or the script infrastructure. So yeah, I think that's the number one advantage. And number two is that we're doing this as a self-custodial basis, which offers that regulatory arbitrage. So we are global from day one. That scenario.
Okay. So you're licensed by MAS, is that right, or a different jurisdiction?
We are no. So in UAE, we are on the license or on the last cost of license with the IFC, and that is a PSP license. So that allows for providing cross-border services and onboarding both businesses and retail customers who are not even in UAE, right? But we can still onboard them and start giving them one.
Right.
And we're also licensed in Europe, which is a vast license, which allows us to convert and hold crypto to fiat.
Okay. So did you look at getting license in other jurisdictions?
Not right now. I think these two licenses work well for now. But we might choose to get licensed in other jurisdictions, depending on demand, really. We see a lot of demand for our product in, the MENA region, the Middle East. We have some larger customers from UAE and Saudi Arabia, which, again, wasn't our first markets to target, but it sort of happens organically.
Yeah. Okay. Well, you recently raised some money with 3.8 million in funding. Tell me that experience. Was it difficult? I know it's been a bear market. I mean, how was that process of pitching, and how many investors did you have to talk to finally close it up?
Hundreds. But so the good thing is that this is not actually my first rodeo.
Yeah.
And so Wind.app is my second company. My first company is called Pakao. It's based out of Bangladesh and Nepal. So I'm originally from Bangladesh. And that is also consumer tech platform similar to Gojek or Grab, right? So ride sharing, food delivery, payments, PNPL, and the whole shebang. Gojek was also our Series A investor. And so I started that company back in 2015 with just 3 friends, scaled it up to 1,500 people, and raised around $50 million by the time I left in 2021. So, when I actually went to investors with the idea of Wind, they really immediately liked it. So I said, it wasn't too difficult, but I was very anxious to get my first sort of lead investor. And I think
Right.
once you have a lead investor, everything sort of falls into place. So I
Right.
was
Right.
very fortunate enough to, have had that experience and built something even bigger this time.
Yeah. Would you have any tips for other founders in this space when it comes to fundraising? What
Oh
would you
man.
like top three things that you must learn or must do?
So the Web3 space is weird, right? Because it's very, very, very speculative. I do think number one is important to have a very big vision on what you're sort of trying to do, right? Not something too niche. Startups, what can raise a lot of money, have large visions. That's what also investors also want to see. So when I say that, hey, I want to be a better transfer wiser PayPal, and here's how I want to do it. That is sort of an exciting thing because people already know PayPal and Wise. It's already big. Okay, you know what? Yeah, if you can probably go in over there. So number one, like have a big vision. Number two is also like have a good team, right? And I can see it can be very difficult for first time founders, especially to raise funds. Because I wouldn't say like it's logical. Investors all are very they match patterns, right?
Okay.
So they wouldn't just bet on you who is a first time founder as easily unless you have a lot of traction,
Right.
right?
Right.
So it's probably good to have a co-founder or two who are in the industry or from the industry and also
Yeah.
have some similar vision. So that's number two. And number three is really, it's a numbers game, right? You have to
Yeah.
just keep pitching a lot, and you have to keep pushing. Like there will be a lot of no's, but honestly, you need only one yes.
Yeah. Yeah. So did you how often did you pivot your story or your pitch deck? I'm
At
assuming you
least,
get some feedback. Yeah.
yeah, yeah. Settled like 2 or 3 times,
Yeah. Yeah.
right? Which wasn't as many as I had to do for my previous company for Pata. Um, I guess like again, like we're still very early, so uh, I would say that the investors sort of bet on us as well. That hey, we're gonna
Right.
probably figure something out. So yeah, ultimately, it comes down to having like connections
Right.
and being in the market, right? That's why I said that it's important to have a good team. If
Yeah.
you have some sort of credibility, or if your co-founders have some credibility that they can lend to the project, that really, really helps. Because what are these people trying to match? What are VCs trying to match? They're trying to match, hey, is this a product that the people need? Yes or no? Is this the market that they can serve? Yes or no? And if this is the founder that can get them there, right? Yes or
Right.
no? So
Right.
there's a product market and a founder fit.
Right. Right.
Yeah.
Yeah, I asked you about how many times you change your pitch because I can imagine many times you might get feedback from investors, and every single investor is going to be a little bit different on the perception of the market, what they're speculating, and how much do you allow it to influence you to tell your story. Such as they might say, well, "Have you ever thought of this?" I feel like you could be. It's a faster road to revenue if you switch your
Oh,
story like this. I'm sure a lot of that stuff happens, right?
yeah. So the other thing is that, you have to realize that the investors also, aren't always smart, right? I mean,
Yeah.
uh, as founders, when we go and pitch, because we're like in, in an act of asking money, we think that, oh, these guys have money, therefore they're smarter than me, right? And I
Yeah.
have to listen to them for me to get money. But
Yeah.
you know, the only thing true about investors is that they have money, right?
Yeah.
So sure, they'll come up with like 100 different ideas, but you are the founder and you have to recognize that hey, this is what you build, this is why you're going to build it. You have to have the conviction
Right.
and then sort of do it. So, I also tell my investors sometimes, that they're wrong, right? Yeah, not a case. So I'll tell you about this like one example, right?
Sure.
And this is also like not just from founders, it also comes from other founders, so not from investors, but also from other founders. So, for our stablecoins, we use USDC at first, right? Because that
Hmm.
is the most regulated, that is like from clean sort of company out of US. We thought, hey, we're just going to use USDC as a payment method, right? And
Yeah.
then we what we started to see is that we started to see a lot of demand for USDP, a lot more than
Right.
USDC. And
Right.
that was very surprising at first to us. Like, why are people preferring USDT over USDC? Because some people don't even know. And, some people also don't know about USDC at all.
Yeah.
So I was like, what's the catch? And the catch turns out that hey, USDT is just a lot bigger,
Yeah.
right?
Yeah.
And people also don't care about Polygon chain or Ethereum or even Solana. They care about Tron,
Yeah. Yeah.
right? Because
It's cheap.
most people, it's cheap and they are having it around. So
Yeah.
USDT on Tron is has better acceptability than let's say
Sure.
USDC on Solana,
Yeah. Yeah.
right? And
Yeah.
when I was talking about this, that hey, to this other founder, not an investor, but this, to another founder, they were like laughing, and I was like, why are you laughing? They're like, oh, you're doing USDT on Tron, that's very fun, smart contracts. Like, in like the user doesn't care.
Yeah.
Why? What? Like, get out of your high horse.
Yeah. Yeah.
Yeah.
Yeah. I mean, that's it goes to say, I guess, if the so some of the a lot of investors that I meet, you could argue that they have experience because they invest in companies and some of them like did well.
Mm,
But for them, honestly, it's a numbers game, right? They probably
yeah.
invest, whatever, 50 million across the board, and maybe 5% do something, right? And then they lose the rest of the money, right? They're hoping for that one big pop that will kind of save, kind of build out the portfolio.
Yeah.
But at the same time, I always feel like unless you've been a founder before, unless you've learned not only to raise money but how to build revenue for a business, like what is it that you know, right? It's really hard to. I find it hard to pitch to investor who's never gone out to actually do that themselves. Because building a revenue model, oh, why don't you do this? Why don't you do that? Charge fees here and there. That sounds great, right? Why did they say that? Because they probably heard it from other investors. Like it's one
Yeah.
of the same lingo everyone talks about, but they've never done it before. So that's one of the things I always found sort of like I get in a way frustrating, right? And they're telling the founders what to do, and yeah, we're not going to get it, but they hold the purse, right? They're the
Mm.
ones that you need to convince, whether or not they know their stuff or not. It doesn't matter. You have to convince them. So
Yeah. The thing is, there's plenty of fish in the sea, right? If
yeah,
that particular investor has a lot of questions or comments, that's fine, right? That's their, opinion.
sure,
There are others who might not share the same opinions.
right,
So, yeah.
right,
So,
right.
if someone just has a lot of questions or, they want to like sort of get into the business, it can be both a good thing or, sometimes you just have to say that, hey, I'll just get someone else.
Yeah, yeah. I mean, someone was telling me, I talked to a lot of founders who's raised money and recently, and I guess the one thing to note is when it comes to seed money or angel
Hmm.
investors, there's a lot out there. It's just like you said, it's a numbers game. So
Yeah.
maybe your 3.8 million may have taken you, I don't know, 5, 6 people, but other people, if you really wanted to, you just have to work harder and you get 50 people. I don't know. I mean, it might not be so healthy for your cap table or how you sell it, but money is out there to be had. It's just it requires a lot of patience, and I guess in some cases it is about identifying the right investors as well. So what are you gonna do with the money? Any immediate plans, expansions, building out your team?
So, I think all of the above. We are still very early. So what we need to do and we need to continue to do is we gotta tech more. I
Yeah,
mentioned compliance is expensive, so need to invest
yeah,
money over there. Need to put some money on growth as well. So I
right,
think all of the above at this time. Um, we are growing healthy, but again, like it can always be better.
sure.
And we set ourselves some very ambitious target for this year. So
Yeah. Oh,
fingers crossed.
let's talk about some of that. What's been the biggest challenge that you're now facing? Now that going into 2024.
Yeah, I've said the biggest challenge really is having right partners for this payments that I mentioned, like this on and off ramp partners that I mentioned.
Right.
Um, because even if we decided that hey, we need to build our own on-ramps and off-ramps, that is not enough. Even if you say that hey, we need license, that is not enough. You are also there's also a lot of partners that you have to rely on ultimately
Right.
for the final leg of the transfer. And
Okay.
a lot of people just don't want to, touch crypto, right? A lot of
Right.
banks don't want to touch crypto. It doesn't have to do anything with the regulations, right? Because we read deeply into that. Uh, they just won't onboard you if you are anything around crypto. So
Yeah.
there's
Yeah.
still this branding problem that
Yeah.
we have, and I also believe that ultimately, these larger banks, they are sort of protecting their own territory as well,
Mm.
right?
Sure.
Because they're
Sure.
at least in the medium term, they are still in the medium through which people can go and back between crypto and fiat,
Right. Right.
right? And if they don't want to touch it, then they're restricting themselves, but also us,
Right.
right? So there is this tension over here.
Right.
So yeah, we found some good banking partner, some reliable ones, but again, like this has been a challenge, and I think this will continue to be a challenge for a while.
Yeah. Yeah, I mean, the perception around crypto is still the same, right? It's a bunch of scams, and stay away from
Hmm.
it, and
Yeah.
without really understanding the industry. Under your license, though, is when people reference like there's crypto, there's digital currency, there's stablecoin. Are they pretty much all wrapped up this and seen as crypto, or do banks at least accept like CDBC, right? You could argue that a lot of banks are going to move that route. Now, once more and more banks are globalizing the a digital currency,
Hmm.
maybe they might open up a little bit. But they're not seeing those as cryptos, right?
I think ultimately they have to open up, right?
Yeah.
You know, first, you know, they scream at you, but then they see the money, and
Yeah.
then and then they're like, okay, we'll do it. Like you can see that playing out really in
Right.
US right now, right? With their ETF approval, suddenly you have the BlackRocks and Fidelities and the Vanguards who are
Yeah.
promoting crypto, high net worth client, right? And they wouldn't even do this like just 10 years ago, right? Or
Yeah.
even 5 years ago, or
Because
even
there was
3 years
no.
ago. They probably did,
Yeah.
and and there was no way for them to do it, and like the government to block it. Why would the
Yeah.
government block it? Because you know some politicians who would block it, right? There is this entire game that is being played over there.
Yeah.
So now that they're all making so much money on it, right? You can only expect more and more players coming into this, right? Because
Sure.
money
Sure.
talks.
Well, I
So
guess
yeah.
it didn't make a difference to these guys until they saw that they could make money from it, right?
Yeah.
And before maybe the market cap was not significant enough to catch their eyes. Otherwise, they're well, it's whatever, right? It's just Bitcoin, right? And then I do
Yeah.
think a lot of people got into it early as a PR thing, right? Like, oh, we're first movers, we're accepting Bitcoin because all of our customers are doing it. But the reality is now, especially with the ETF getting approved, there's gonna be a lot of money flowing through, and they need a piece of it. So, do you
Yeah.
think? Do you think a person like BlackRock? Do you think they'll start to accumulate like massive amounts of Bitcoin and control the market?
I mean, if I was them, I would. Why? I mean, it only makes sense, right? It's
Right,
only makes like obvious financial sense to do it.
right,
So, you know, show me the incentives and I'll show you the way, right?
yeah, yeah. Well, what do you think is the challenges then just for the DeFi space in general? I mean, last year or the years before, they had the DeFi summer. A lot of positive news came out of it, but then it more or less crashed. A lot of scams, fake TVLs being reported. But
Yeah.
I don't know. What do you think? Where do you think DeFi will be? Or what does it need to do to really solidify itself in the market?
So, I think there's a lot of interesting projects that came out of that DeFi summer that you talk about, like 2020 or 2021, and
Yeah,
they are still here, right?
yeah, yeah.
The Aves, the Curves, the Uniswaps,
Mm-hmm.
they hold significant, TVL, and they're only going up, right?
Right.
Um, so, I do think that some of these projects are already sort of successful, right? Now
Yeah.
the question is that, okay, now you have the basics done, which is, let's say, trading, you have lending and borrowing. What else can you build on top of it, right? And
Right.
perpetual DEXs comes into mind, or leverage trading comes into mind. There's a lot. There are a couple of
Yeah.
projects that are building in the space, maybe GMX, Gains, DYPX, others, but there is no clear winner on that side as well. And that's just
Right.
on the replication of existing infrastructure,
Right.
existing financial infrastructure. Then there is this entire game of real world assets that you can bring in over there,
Right.
right? So, my company is not a US company, right?
Right.
But US is giving this 5% in treasury bills, right?
Right.
Which is very, very difficult for me to access sitting out here in Singapore
Yeah.
or in Bangladesh.
Yep.
Right? Like, even if I wanted to do it properly, legally, I wouldn't pass the KYCs,
Yeah.
right?
Yeah.
It's
Yeah.
very difficult. But I can then do that on dive,
Yeah.
right? I can do that regularly.
Right.
So a lot has to do with this real world assets and this market adoption, this financial assets which were until now out of reach of others, but now coming into reach of people through blockchain.
Right.
It wasn't possible.
Right.
So real world assets is one of the categories I'm very bullish on. The second one I'm very bullish on is gaming. The whole,
Yeah.
I think there has been a lot of good successes over there. I think this year some really good trailers. We've seen trailers. I've even played a few that's gonna come out, and
Yeah.
uh, that is really really good. The third one is really on AI, right? Which I think is going to be a
Yeah.
very big play. Right now you have these AI companies, whether it's OpenAI, it's Microsoft, whether it's Google. They sort of hold a lot of this computing power
Yeah.
by themselves, and it's very difficult for anyone else to do it, right? You need a lot of money to go into AI. Just otherwise it doesn't work because it's a function of compute.
Right.
Whereas now you have again this decentralized AI projects like Render or Big Tensor that also allows you to access AI capabilities from a decentralized way. So, we had DeFi summer in 2020, but this time around, it doesn't have to be DeFi. There is a lot of
True.
room for DeFi to grow, but then you
Yeah.
have RWAs, you have gaming, you have AI. There's a lot of other sectors. So We'll see. We'll see. I'm very bullish on all of them, right? And I think they all have a lot of chance to grow.
Yeah. What aspect of gaming are you bullish on? So is it the type of Web3 games that are being created? Is it collectibles? Is it play to earn type models? Or what is it? What do you see in gaming that's gonna pop?
So, I just feel like, buying and selling of in-game items and in-game currency, that hasn't really been done well yet,
Right.
right?
Right.
Like I remember, playing Warcraft when I was younger, right?
Yeah.
And there were these different skins or weapons that were being
Yeah.
sold uh, in forums, right? It
Yeah.
wasn't allowed, but
Yes.
people were buying and selling them
Black
on
black market.
forums in the black
Yeah.
market, right?
Yeah. Yeah. Yeah.
Um, so, and the thing with black market is it's called leads away. It shows you that there is a market,
Yeah. Exactly. There's a
right?
demand for
So,
it. Yeah.
so there is a demand for it. So if you can make a game with where you don't have it sort of cordoned off in the black market, but you sort of promote it, right?
Yeah.
You allow the users and you celebrate the users to buying and selling and trading in-game items.
Right.
And then the games probably take a cut and the users are happier because everything's clean and like it's safe. It's no longer a black market.
Right.
Um, there is a lot of value to be had, right?
Yeah.
The selfless workout, like you do this right now in Fortnite and other games. So it's again like it's taking something that already exists,
Yeah.
right? And
Yeah.
can blockchain make it better? I think so. I think so.
Yeah. 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 But I can see that because the in-game purchases until you actually are in the game and discover what else is there. So I used to be a big Gears of War fan, or I
Hmm.
played Halo. I was an Xbox console guy, and I always wanted like the access to the marketplace, but it didn't work so well, right? But over a period of time, I can imagine with all these games, you can access some of these cool weapons which you didn't have before, and it
Yeah.
totally changes the gaming experience. And as silly as it may sound, I'll buy it. Why? Because I'm having fun. It's
Yeah.
entertainment, right? Yeah, So, and if I put in a lot of playing time on one game, and someone wants to buy my account, and I'm done with that game, so be it. I can monetize it, and I can move on to something else, right? So it's really strange in that gaming world, but it is definitely a cultural lifestyle thing that people are a part of. So yeah,
Yeah, exactly. Exactly. I
yeah,
think um gaming AI is the other one that I'm like really
yeah,
excited about, right? Because uh, yeah, it's just merging of like two very exciting sort of technology. You have decentralization, which is
yeah,
crypto. That's what crypto ethos is. But the AI ethos, whether intentionally or unintentionally, is centralized, right? Because of this
right,
high GPU
right,
requirements. So, decentralizing that could be game changing.
right, right. All right, well, I think we'll end the podcast here, Elias. I want to thank you for your time and kind of pick your brain a bit. And yeah, I look forward to seeing, how you're going to go ahead and expand Wind with the recently funded amount that you got. Hey, so that concludes this episode of the Startup Voyage podcast. I would like to thank all of you for listening to this episode, and I'd really appreciate it if you leave any type of comments that you'd like to share because it helps to feedback on how I deliver these podcasts